but that's okay. So kia ora, ngā mihi nui kia koutou. Nau mai haere mai ki te hui mariko, which, as I understand, is welcome to this online seminar. Thanks very much for joining us, and I think we've got a really good session for tonight. As a reminder, these are weekly online seminars, and this is, I think, the 26th, so about 6 months worth of seminars, and all of the seminars are available on the Mindful Money website under events. So we've had some great seminars recently on gender, on Māori perspectives. We've had Sir Jonathan Porritt, we've had James Shaw, Minister for Climate Change, Matt Winneray from the Super Fund, and many others. So please check those out and catch up on ones that you may have missed. Tonight, it's my great pleasure to welcome a couple of people who I'm really interested in talking to tonight. So very warm welcome to, firstly, to Reuben Casey. He's the CEO of Kathmandu. I'll introduce him in a couple of minutes. And also Oyvinn Rimmer. Oyvinn's from Harbour Asset Management. So the format for tonight is that we're going to have a discussion for about 20 minutes. And while we have the discussion, you're very welcome to put in any comments, any questions into the chat on Zoom, or if you're watching this on Facebook Live, into the comments section of Facebook Live. And my colleagues will send the questions through and we'll include those in the discussion. So please don't feel like you have to wait until after the discussion winds down. You can put in questions and comments whenever. And then we'll be finished after around 40 minutes. These are short, sharp seminars, so we'll finish at around 7:45, and sorry for the slight delay in getting going. So warm welcome to Reuben Casey. Reuben's been at Kathmandu for 10 years, for a decade, fulfilling various roles, including Chief Financial Officer, Chief Operating Officer, and now CEO. Prior to that, he was Finance Director for TaylorMade Adidas Golf Europe, based in the UK. He's worked for Meridian and KPMG in New Zealand. And memorably, he's done the cycling glory legs in the Coast to Coast event, and he's done it twice. So we have an image of him neck to neck with Richie McCaw racing on their bikes. So warm welcome, Reuben. So Oyvinn Rimmer is a research analyst in the equities team at Harbour Asset Management. And in fact, he's one of the 5 original founders of Harbour. He covers a number of sectors, including retail and consumer, agriculture, metals and mining. He's been in New Zealand for 20 years, but originally came from Norway. So a very warm welcome to you too, Oyvinn.
Thank you.
So let's kick off. I'm going to ask Reuben to start. And Reuben, can you lead us through the Kathmandu journey on ethics and sustainability? Because as I think I understand, you've really made that one of your distinctive features of your time at Kathmandu and as your leadership as CEO. So can you give us a background?
Yeah, sure. And I should point out that my neck-to-neck moment with Richie McCaw was on the very, very, very start of the start line last year. So it was about 5 meters and he was well ahead of me already. Just in terms of, Kathmandu, way back to 1991, we started making an eco-fleece made out of plastic recycled bottles. So we've kind of been at it a long time from a materials point of view, but really in the last 5 to 10 years in particular, the kind of human rights in our supply chain has become a much bigger focus. Under when Peter Halkett was CEO, we kind of started with a sustainability person, and we canvassed shareholders, the board, team members, and customers, and human rights was the #1 priority that they called out that we should be focusing on. And really, we'd already started working on it, but it really kind of helped us kind of focus our efforts on making sure that the people who make the Kathmandu gear are actually protected in our supply chain and treated as we would expect them to be treated, as if we were making it in New Zealand or Australia. And we've done that through third-party audits, through partnering with other brands, and through partnering with organisations like the Fair Labour Association. So we got accreditation with the Fair Labour Association a couple of years ago. And last year became a certified B Corp, which really validates everything that we are doing. They have a really strict and ever-increasing criteria for maintaining accreditation. So effectively, they kind of audit our practices really and provide a third-party validation of what we're doing. We've also scored, an A in the ethical fashion report by Baptist World A, which is really Australasian focused. And really, for us, it's about committing to our team members and to our customers that we are trying to do things the right way, rather than just tick boxes and get accreditations. It's about actually doing the right thing. So we've been quite innovative in terms of how we've brought that to life in our supplier factories. So every supplier has to sign up to our code of conduct, but we've actually published that in the native language. It has to be displayed, and actually we've set up an app on through WeChat as well. So workers can just scan a QR code and get taken straight to our code of conduct. So they are always aware of what is expected by us of their employers. And actually that's worked really well. We've had a couple of instances where people have raised the flag saying things aren't quite right here, and we've been able to act on that really quickly. So that's quite an innovative approach to how we can do that, because as you can imagine, being so many thousand miles away, it's very difficult to really know what goes on. Even auditing can be manipulated, and there's a lot of corruption in that kind of industry. So it's really important for us to try the connection as possible with the people who are working in the factory.
It's a really good example of being able to tap into people's experience on the factory floor. And was there anything in particular that raised human rights as a particularly salient and kind of urgent issue for you guys? I don't know whether the timing was such that the Rana Plaza collapse happened around the time that you were kind of gearing up to do more. Was there some particular incident or a major problem that sort of accelerated the journey for you?
Not really. I think once we moved production from what was Christchurch mostly to Asia, certainly that became more and more of a focus. And the Rana Plaza just confirmed for us really the importance of what we were doing, and really heightened to the team why it was important to keep progressing down the path we've been progressing down. Yeah.
Okay, cool. Let's switch the story for a second to you, Oyvinn, and if you can for us trace the journey from Harbour's perspective on your engagement with Kathmandu, and maybe a little bit more generally about Harbour's work on ESG and corporate engagement.
Sure. Why don't I start with that? So, and I know you had my colleagues on a few weeks back that covered that in quite a lot of details, but it's been a core part of our process since the beginning of Harbour. And we explicitly integrate ESG scores of each company on the NZX 50 and ASX 200 index on their ESG performance, and that goes into how we rank the attractiveness or sort of the investability of the companies we look at. And at the heart of it sits a survey, an annual survey that we do of companies that's just shy of 100 questions, where we go out to the corporates and we sit down either with the CEO, the CFO, the chairman, and talk through all these questions and touch points. And quite often, it's not the case that one person can answer them all, because some of them are quite detailed, but that sits at the heart of how we rank and score companies. But then stories like Reuben's here, they're really powerful in terms of showcasing the seriousness and how committed corporates are to making the world a better place. And they just have an exceptional number of checkpoints in place to protect their supply chain. And it's very easy for us to just look at that piece of paper and all the audits and be comfortable with that. I think most investors do, but it's not until you actually meet people in the supply chains that you fully grasp how well Kathmandu is actually doing. And for me, the big event that showcased Kathmandu's best practice was back in 2018. My managing director, Andrew Baskin, and myself, we flew over to Denver, Colorado, where that's home to the Outdoor Retailer Conference. It's the biggest event of its kind, a seasonal event where all the major brands from all around the world come, including Patagonia, which is highly regarded in supply chain management. And we went around and we talked to all these brands, and on our little sort of entry ticket, it said Kathmandu. And every single one we talked to who knew about supply chain talked about Kathmandu and how great they're doing. So all these major brands around the world working in this industry are familiar with Kathmandu and the great work they're doing. Some of these brands they work together with towards a common cause, but that was quite powerful for us as investors in Kathmandu to get that sort of third-party validation. And obviously that helps us when we answer these questionnaires as well, because there is actual grunt behind that.
Good. That's a really lovely story to hear, and I'm sure you like that story, Reuben. That's a nice accolade. Reuben, one of the key issues for supply chain management is how you kind of make those trade-offs between low cost and sustainability or human rights in the supply chain. So, for example, you go out for a tender for a particular garment, and you get various people coming back, various companies coming back with quotes. Some of them are lower quotes, some of them are higher. How do you weave the human rights and sustainability into assessing what the right balance is between a legitimate concern to keep costs down and make money versus sacrificing sustainability? How does that work?
Yeah, I think the first thing I would say is that sustainability and low costs aren't great partners.
Yeah.
I think generally it's, and you see that even with things like climate change as well, generally the cost of a more sustainable approach is generally higher than what has historically happened. And when we choose a new supplier, we go through a very stringent validation checklist. We look at what other brands have been using them, because outdoor and sports in particular are very collaborative in this space. So if we can see that other brands have used them, we will generally be able to get access to their audit reports that they've had and validate with them the approach that they've taken. Some of our suppliers have also been accredited as Fair Labour Association. So some of the suppliers are now starting to get accreditation because they can see that has a benefit for them in being selected. But we have a stringent checklist that we go through, and it would normally involve a physical visit to the factory as well. And it's important to note we don't validate the supplier, we validate the factory. So it's really about the actual physical location where the product has been made.
And it's the Fair Labour Association accreditation system that you regard as the most credible. Is that correct?
Yeah, there's two globally. So there's Fair Labour, which is more of a US-based one, and it's an NGO with a combination of brands and academics and social organisations, and then in Europe is a Fair Wear Association or Fair Wear accreditation. So those are the two main global kind of qualifications you can get in this space, really.
And so you're driving through these supply chain practices and obviously giving them some priority in your organisation. How do you see, when you look across other New Zealand companies that have global supply chains, do you see a similar level of attention and priority? You know, what's the state of practice in New Zealand? Are we doing well? Are we not doing so well? What's your assessment of where we are?
I think the Baptist World Aid ethical fashion report has really helped raise awareness, and certainly some New Zealand companies chose not to participate. Even ones who are doing a great job, like Icebreaker's doing a great job, they chose not to participate and got an F, which I think stung them into action, and then they got an A+ the next year. So I think once they actually disclose what they were doing, so it's about transparency, and I think what it does, and what we're very happy to see, is actually all companies improving. That's really the whole point of this, is if we can all, if we can lead and other people want to follow, that's great. If it raises the bar for everyone, I think that's a great outcome. So I think we're, New Zealand is certainly, we can still do a lot better, but it's certainly heading in the right direction for sure.
Cool. So switching to you, Oyvinn. So, you know, given the fact Kathmandu is on this pathway, in what ways can funding providers like Harbour Asset Management, how do you interact with Kathmandu? How can you help them along this journey? How important is it for you as a finance provider?
I think that is a great question, and we do have dialogues, particularly with the management team, but also the board, and we've given a clear indication that we're behind them on this journey around sustainability. And especially in the early days, when we came on board to the story, consumers weren't voting with their wallets yet, and even at this point in time, we can see momentum is picking up. It's happening more and more, but the commercial outcomes are probably not crystal clear. But that is not the point here. It is about the medium to longer term, and it's a journey we just have to push for as a capital provider to our companies, is to push them as hard as we can to pursue these goals. And with Kathmandu, it's been fairly easy because they are so driven on this agenda themselves. But as capital providers, we can only encourage it, and we bring it up with them when we talk, which happen fairly regularly. But we've had multiple significant capital events over the last year and a half, call it, with an acquisition of Rip Curl, and also the COVID impact that needed balance sheet support. So I think the collaboration between capital and companies is really important, and when we can actually philosophically agree on this topic, that just makes everything a lot easier. And I think you'll see that through Harbour's sort of A+ consistent rating and the sort of UNPRI ratings, that we're really committed to this course, and it's quite good to have companies like Kathmandu in the portfolio for those reasons.
Yeah, and for you guys, presumably you don't have such nice conversations with some companies.
Yeah, there is always going to be a topic with any company that you don't agree on. So there's tough conversations all around the place regularly. But yeah, on these topics, we certainly want to see companies commit to improving. But I think my colleagues pointed out to you a few weeks ago that we don't have a hard exclusion on many sectors, but It is really enabling and empowering companies to start that journey from, regardless where they are, to something that's better. And with capital, we vote on that agenda.
Yeah, and presumably there are times when you have to walk away and say this company is not up for the standards that you feel comfortable with.
We have examples in the past, yes, of that happening for sure. Yes.
Yeah. So, Reuben, do you I know you guys don't get a whole lot of international capital into Kathmandu, but do you see this kind of investor support for sustainability being something that is growing and that is becoming more of a dynamic? Because what most people are used to is the finance sector being obsessed with short-term kind of returns, quarterly reports. I guess you've just been through one of those, and not really caring so much about sustainability or the long term. How does do you see that changing?
Yeah, for sure. When I was, if I think back to when I was CFO, doing investor roadshows regularly, we would always mention sustainability, and we'd always bring it up because we thought it was important. It was very seldom the other way around, but certainly in the last 2 or 3 years, it's become more and more prevalent that people are asking us about it versus the other way around. And there's even, there's ethical investment funds in Australia who have set up, and shareholders of ours as well. So it's certainly a growing trend. I mean, not every investor still asks about it, and we still have to bring it up sometimes. But there's certainly been much more of a topic of conversation in the last 2 years, markedly actually.
Okay. Good. So for those of you in the audience, feel free to lob in some questions at this stage. We'd love to hear from you. So why don't you put some stuff down that you'd love to ask Kathmandu and Harbour Asset Management. So can I ask, go back to this issue of acquisitions? You referred to it, Oyvinn, around the purchase of Rip Curl, and that's often where you get corporate cultures that aren't quite aligned on a number of issues. So for you, Reuben, kind of how's that been in terms of matching corporate cultures or enmeshing corporate cultures on issues like sustainability, where you have maybe different approaches or different levels of commitment in a merger situation?
Yeah, we take it very seriously in terms of the cultural alignment. With Obos, we spend a good deal of time with them and talked about sustainability and how they were in their journey. And certainly they've been a much smaller brand than us. We're really happy for us to be their parent company, because they knew we would be able to help them a lot with their journey. And in the US, it's becoming a lot more of a requirement from retailers. So if you take REI as an example, which is the largest outdoor retailer in the US, they've actually introduced quite strict standards for all their suppliers in terms of, so if you want to sell through REI, you must meet a minimum standard of sustainability, and that ratchets up over a number of years. So Obos was very, very hungry to actually have the help and the assistance with sustainability. With Rip Curl, they were doing a lot but weren't really telling anyone about it. So again, very, very good alignment there in terms of the desire to do more, particularly around materials in their products. So the increasing use of recycled materials and other less harmful materials in their products was something that they were focused on, and we do a lot of that already. I mean, we're ranked really quite high in terms of global volumes or global percentages of recycled materials in our products. And one thing I did ask, that I remember the first time I met Michael Daly and the Rip Curl owners, was about, they had an incident in North Korea. So they had someone was undercover reporter from Australia was doing something in a North Korean factory and saw Rip Curl product being made, and that was a subcontracted. Someone in China had subcontracted to a factory in North Korea. So it was actually one of the first things I asked them about when we first met, because you know, and how they were thinking about that and how they were dealing with that issue, because there's no way we could partner up with a company that wasn't serious about looking after that part of their supply chain. So.
Yeah, kind of tough place to ensure human rights observance in North Korea, right?
I think so. Yeah, yeah, and that's why this highlights why we audit the factory, not the supplier.
Yeah. Reuben, we've had a question in from you from David Woods, who, by the way, is going to be on our program next week. Hi, David. And he's saying if you compare Kathmandu with, say, Häggloss in Sweden, or Low Alpine / Karamore in the UK, or Woude Deuter in Germany, I don't know all of these suppliers.
Yep.
How do you rate your standards that you ask of suppliers compared to the European supply chains?
I think we're equivalent to some of those names. I know Karamore is more of just a licensing agreement nowadays. So, but Woude is certainly a really good example of a company that's doing some great stuff in sustainability, particularly around their rainwear. They've done a lot of work in removing PFCs and DWR coatings from their rainwear, which are can be harmful chemicals. So they hold things really highly. But we work with lots of those brands on a collaborative basis in terms of having common standards, and and having the B Corp accreditation and the Fair Labor Association accreditation gives me great confidence that we're kind of world leading standards in what we ask from our suppliers.
What are the forums do you have to work across the different companies on collaboration around these issues?
Yeah, there's quite a few of them actually. We're about to release our sustainability report, and there's a whole heap listed in there. But things like the Sustainable Apparel Coalition, where brands come together and share ideas. There's the Outdoor Industry Association. Obviously, the B Corp is a great organisation for sharing ideas as well. And then we work with Elevate, which is our third-party auditing partner. So they help us make sure we get to the right places. And we work with Blue Sign, which is a fabric accreditation agency. Just they basically provide accreditation that the fabrics you're using aren't harmful to the environment. Leather Working Group, there's lots of them. Yeah. Textile Exchange is another one. So yeah, all these kind of collaborative organisations are set up to help each other and learn from each other and spur each other on to greater heights.
Yeah. So a question for you, Oyvinn. You're obviously covering areas of retail and consumer goods. Can you talk a little bit about some of the other sectors that you work in? Because I think you said metals and mining and agriculture. You see the same kind of drive towards sustainability in supply chains in other sectors as well?
It is a broad range. It is a very broad range. And I think metals and mining is probably the trickiest one because of the geographical location of some material resources that are very tricky to fit into an ESG sort of best practice framework. And it's very tricky to audit. I mean, me personally, it's quite tricky to go into the Democratic Republic of Congo to audit mining activities there. So it is a huge spread, and we've tended to operate with the larger companies where the assets are really well known, well audited. But even then, things can happen. So it's a higher risk sector. So comparing that to companies like Kathmandu is very tricky. So typically we look at within sectors which companies are really lifting the bar on these topics. And similarly in agriculture, it is very tricky to compare like for like with Kathmandu. It's just not possible given the differences in businesses. But I think agriculture is quite interesting because of the New Zealand intensity there, and companies like Sunlay Milk down south, they got their B Corp accreditation just a couple of months ago. So and that is an indication that obviously they're pushing hard to move in that direction. Recently, they've announced that they're going to fast track the electrification of some boilers, and they're currently setting up some trials around biomass in the coal burners instead of coal. So they're committed on a journey, but it's going to take time. It's very capital intense to move some of these things overnight, and investors just wouldn't entertain that. But they have a plan, and they're on that journey. And on top of that, they also have probably the world's best sort of on-farm incentive scheme where it's called Lead with Pride, and it helps farmers get slightly better pay for their milk if they can meet a whole lot of criteria, being it animal husbandry best practice or runoffs of fertilizer, etc. So I think there is innovation, and certain companies are driving and helping to lift the bar on those metrics.
And in the mining sector, were you surprised by Rio Tinto getting into trouble for destroying Aboriginal cultural sites? And was that something that had been on the radar previously for institutional investors?
Well, all the mining companies are always sort of on watch, I think, more or less, because things can happen. That they got in trouble, I don't think it is surprising. The fact that they actually did what they did is the surprising part, I think. And yeah, I think it shocked the investment community big time. And the initial sort of response from Rio Tinto just was not palatable by the investment community. So it was a firestorm, I think, amongst the shareholders to put pressure on the board to do more. And there's still calls out there to have more done, but I think a lot of people are taking a little bit of a wait and see now in terms of the review of how they operate. There's a big procedural review going on to make sure that they don't do stuff-ups like that going forward. But yeah, tricky.
Do you think this might change the nature of the kind of institutional investor, how should I say, monitoring of companies? Because ideally, you'd want institutional investors raising these issues before these things happen rather than just afterwards.
I think there is an inherent expectation amongst the investors that corporates, they need to have there's a license here, that a social license to operate, and it is very
you compare to another article that has
more than doubled its share price this year, and Rio Tinto has done very little despite iron ore being at record high prices at the moment. So there's definitely this sort of sentiment overhang of lack of support until there is better clarity on direction, the new management team comes in and shakes things up. So yeah, I think for the time being, that company is sort of on hold for the time being, but there's no doubt that the investment community is focusing more on this, and there's more examples. I mean, it's AMP as well. They've had executive changes on ESG sort of grounds recently as well, and we're seeing more and more examples of shareholder pressure on these matters. So it's becoming very serious now, which is good.
So apologies to anyone who heard your sound suddenly go very, very strange. It seemed to crackle, but it's okay now. So we're coming up to the end, 7:40. Maybe just a kind of a last couple of comments from both of you. Reuben, maybe first. What does the future look like for you over the next few years? What kind of challenges are you seeing coming down the line that would demand a kind of a response in terms of your sustainability policies and supply chain measures?
Yeah, I think particularly in apparel, there's two big challenges. One is recycling of soft plastics. So almost every apparel garment gets shipped in a poly bag, which needs to be recycled. Now, as we know, with processing in the news recently, New Zealand doesn't have good facilities for turning that recycling or processing their recycling, and Australia similar. So that's a big challenge for the apparel industry in general, and certainly we're a part of that. And the other big challenge is really to try and find a way to make products more circular. So rather than that whole circular economy is a kind of a nirvana for lots of people, where products after they've been used kind of can get repurposed and then get reborn as something else. And really trying to find ways, and potentially it's things like rental schemes or subscription schemes. Those are or reselling of secondhand products. That's certainly a challenge to try and extend the lifespan of things, because we have a very throwaway society in general. I've seen stats that say most garments are worn 7 times before they're discarded, which is horrendously low. So to try and extend that out is really a big challenge for us in terms of what the part we play in anyway in our kind of space in the apparel arena. So
yeah, interesting. So I can look forward to the time when we're going to be sharing our Kathmandu garments amongst a few of us.
Yeah, and just to add to that, like obviously we're a listed company. We're designed to generate returns for shareholders and value for shareholders. And there's a little bit of conflicts there with us more. If you took a pure sustainability approach of actually we should be selling less and encouraging people to use less rather than more. So to try and navigate that balance is tricky as a listed company.
Yeah, cool. And there are some great stories about Interface on carpets and other companies that sell services as opposed to products, and the fact that they've kind of done quite well out of it. So it's maybe it's just a rethinking of the business model.
Mm.
So Oyvinn, for you, what's coming up? What's on your horizon for the next year or two?
On this topic, we just hired another resource that's going to do a big research project for us on the social aspect of ESG. So the specific project. Last summer we did on the environmental side. We're also going to continue the work with corporates to help them on their journey. There's a lot of work being done at the moment with the task force on climate-related financial disclosure. So we're putting our sort of agenda understood to our companies. I think it's really important that everyone buys in, and disclosure is really important for us now to be able to see where we need to push companies as well and work with them.
And remind me, Harbour's not at the level that you would be required to disclose under the new TCFD draft?
I believe I think it might be. I think I think fund managers might be. Yeah. So I know there's a lot of work being done at a corporate level. I've been snowed under looking at companies, but I think there's a massive work stream coming, so we should be part of that journey.
Okay, great. And I know you guys are doing lots of work on the responsible investment, ethical investment side of it, so it's terrific. So thank you very much, Reuben and Oyvinn, for that discussion. I think it's really, really great, and congratulations to you both for the work that you're doing on support of sustainability. That's terrific. For listeners, next week we have David Woods, who's on the call, and Jamie Newth from University of Auckland and Soul Capital. And Rangamarie Price, who are joining us for a seminar on investing for positive impact. And this is really the area where, rather than just avoiding harm or adopting higher standards, we're looking at investments that do add positive good in society. It's a kind of new area, exciting area. There's not a lot of investment opportunities yet directly in Aotearoa, but next week we're going to hear from the panel around laying the foundations of impact investing. So thank you very much for joining us. Information on the previous seminars is on our website. For people who want to know what's in your KiwiSaver fund or in your retail fund, go to Mindful Money, www.mindfulmoney.nz, and find out. And you can also look for a more ethical KiwiSaver or investment fund on the website. A particular thanks again to Reuben Casey, CEO of Kathmandu, and Oyvinn from Harbour Asset Management. Thank you both very much for joining us. Ka kite anō. Have a nice evening, everyone. Thank you.
Yes.
Thanks, Barry.